The Trump rally, let's call it what it is, the Trump rally, it rolls on. President Trump's economic advisor, Steve Moore, is with us now. Steve, you say the nation's wealth has exploded, and I know this is factually true. It's up $2 trillion since the election. I see that as nothing but good, and I see it having a positive influence in the future. Agree with me?
Yeah, there's a wealth effect, no question about it. You know, over half of Americans own stock, so when you see that $2 trillion increase in wealth, and most of that is in the stock market, that means Americans can spend more. You know, you looked at some of those, you were talking about Mattel and some of those retail companies that haven't done so well recently. You know, if Americans feel they're wealthier and they've got more money in their savings account and their 401k accounts, they spend more. So this is good news, not just for investment, I think eventually for consumption and retail as well.
Yeah, I think it's good news for the second home market as well.
You got it.
Now, Steve, earlier I spoke to Congressman Pete Roskam. He is the Tax Policy Subcommittee Chair.
Yep.
I asked him if tax cuts will be retroactive to January the 1st. Listen to this. If it's going to be backdated to January the 1st, 2017.
So I don't think a decision has been made on that yet, and there's going to be a lot of other people that are going to have input. Here's what we want to avoid. We want to avoid anything retroactive that hurts people that they didn't anticipate, but if there's a backtracking benefit that we can do to this that makes it so that we get the tax cuts and the energy out there earlier, we're all the better off.
Steve, he would not say yes.
I know, that's a little ambiguous.
We're kind of worried about that.
Yeah,
what say
I
you
am
here?
too. You know, I think it would be very wise for Paul Ryan and Donald Trump and Orrin Hatch, who runs the Senate committee, to say anything we do this year on tax policy, and we're going to get this tax cut done, is going to be retroactive to the first of the year. Because I've been to this movie before, Stuart. If investors wait and you know, companies wait to do the spending until they're sure they're going to get that tax cut, and if they think, you know, they spend now and I'm going to pay a higher tax rate than if I wait 6 months, you get a delay effect. We saw this in the Reagan years. One of the mistakes Ronald Reagan made when he passed his 1981 tax cut, and Arthur Laffer talks about this a lot, what exacerbated that recession we had in the early 80s was they delayed the tax cut. So people waited to make those decisions until they were fully phased in. I think the President and Paul Ryan should make an announcement right now on your show saying that this is going to be retroactive to, if not January 1st, how about February 1st?
Well, we've got 20,000 on our show. I'd love to have that announcement on the show, too. Real fast, Reince Priebus told Sean Hannity last night that economic growth in America could go as high as 7%. Now,
I love it.
Yeah,
and you thought I was a bull.
Yeah, but that's an exaggeration, isn't it? You're not going to get that.
Well, look, let's go back to the Reagan years. Did you know we had quarters of economic growth, Stuart, of 8.5%?
No, I didn't.
So it's, you know, now look, that's a big burst in growth. I think 7.5 is a little bit high, but I think we could have a couple quarters of plus 4% growth. And boy, when you've only been growing at 2%, you've reported this many times on your show that we have not, correct me if I'm wrong, Stuart, I know you've reported this, no time in 10 years have we had a year of over 3% growth. So,
that is true.
So, you know, if you get 4 to 4.5% growth, that's going to feel really good.
Yes, and you would feel it.
It's going to lead to a higher stock market. So I'm not going to go there, though. I'm not going to say 7%. That's, even for me, that's a little bullish.
Okay, Steve. Thanks for being with us, Steve. We appreciate it always. Thank you, sir.
Thank you, sir.
Thanks a lot.